Taxation. The Philippine Tax Code. One idea runs underneath all of it. Taxes are the lifeblood of government, and almost the whole of tax law is about fencing that power in. When Ferdinand Marcos died in 1989, his heirs never filed the estate tax return the law required. So the Bureau of Internal Revenue filed one for them. In 1997, the Supreme Court ruled the assessment final and enforceable, around 23 billion pesos. With decades of surcharges and interest, that unpaid bill is now estimated at over 200 billion. One estate, one tax, still unpaid across 5 presidencies. That is the power of taxation and the machinery around it in a single story. Taxation is the lifeblood doctrine made law, but the Supreme Court drew the line in CIR versus Algue. The power is vital, yet it must follow the law, because arbitrariness would negate the very reason for government itself. So the system has 3 moving parts: a near limitless power, the fences that shape it, and the remedies that protect you. Act 1. The power to tax. Where it comes from, and its limits. The state does not need permission to tax. It is an inherent power, alongside police power and eminent domain. Taxes are its lifeblood, so collection can't be casually blocked. You generally pay first and seek a refund after. But the Constitution fences it. Taxation must be uniform, equitable, and progressive. And in CIR versus Algue, the Supreme Court set the counterweight. Collection must follow the law because arbitrariness would negate the very reason for government itself. The taxes all live in one code. The National Internal Revenue Code of 1997 repeatedly recalibrated. Train lowered income tax and set the 6% transfer taxes, create cut corporate rates, and create more, and EOPT refined incentives and made paying easier. Act 2. The taxes themselves, on income, on companies, on consumption, and on wealth that moves. Start with income tax on individuals. Employees are taxed on their compensation. The self-employed and professionals can choose the graduated rates, or, if they earn under 3 million pesos, a flat 8% shortcut. Mixed earners combine both. In every case, you're taxed on income, not gross receipts. The schedule is progressive. Earn 250,000 pesos or less, and you pay nothing. The top rate is 35% on income over 8 million. These are the rates in force since 2023. Corporations. A domestic corporation is taxed on its worldwide income at 25%, or 20% if it's small, net income up to 5 million, and assets under 100 million. Foreign corporations are taxed only on income earned here. And a minimum corporate income tax of 2% catches companies that always seem to report no profit. Here's how the government makes sure it gets paid. Withholding. Most income tax is collected at the source, shaved off your salary or a supplier's payment before the money ever reaches you. It's mandatory, and the withholding agent is liable if they fail to deduct and remit. On consumption, value-added tax. 12% on businesses above the 3 million peso threshold, but it flows through a credit system, output tax minus input tax, so it lands on the final consumer. Below the threshold, a simpler 3% percentage tax. Move wealth and the tax follows. Pass it at death, estate tax a flat 6%. Give it away, donor's tax also 6%. Sell shares or real property, capital gains tax. Sign documents, documentary stamp tax. Act 3. Local taxes and what happens when the Bureau of Internal Revenue comes knocking. Before the defenses, one more layer. Local government units tax too. A local business tax on your gross receipts and real property tax on land and buildings. National taxes are not the whole bill. And here's the taxpayer's fence: remedies. A BIR audit is a ladder: a letter of authority, a notice of discrepancy, a preliminary assessment, then the final assessment. At each rung, you have a deadline, and if you miss 30 days to protest the final assessment, it becomes final, executory, and collectible. The BIR generally has 3 years to assess, 10 if there's fraud. Process is everything. In the Pacquiao case, a 2.2 billion peso assessment was voided because the BIR skipped proper notice. The mirror image of enforcement, incentives. Register with an agency like PEZA or BOI and the state hands power back. Income tax holidays, then a special 5% rate, duty-free imports, deliberate fences lowered to attract investment. Return to the Marcos estate, 200 billion pesos the lifeblood power still cannot fully collect. And to Pacquiao, where that same power was stopped cold by a missed notice. That is the whole of tax law in 2 stories. The power to tax is almost limitless, which is exactly why the law spends its energy building fences. Knowing where they stand is the difference between a manageable bill and a ruinous one.